borrowers can breathe a sigh of relief. The latest inflation figures are much weaker than expected, and that makes it much less likely that interest rates will go up next week. Philip Lasker reports.
Even the busiest businesses are feeling the price pinch.
I think we've got about 10, 12 coffee shops around here in one block. So, you start increasing your prices and you're going to lose some customers, and we can't do that.
Today's numbers reflected the consumer caution. Inflation slowed in the June quarter, rising 0.6%, leaving the annual rate at 3.1%. The quarterly increase in the Reserve Bank's own measure, core inflation, was as weak as any in the past 3 years, with an annual rate that dropped back inside its 2 to 3% comfort zone. Within the numbers, prices for non-tradable goods, those goods made in Australia, fell sharply.
In the first quarter of this year, non-tradables inflation was up 1.5% over the quarter. That eased just to 0.3% in the second quarter, and that's a signal that domestic price pressures have really diminished.
Aggressive discounting by retailers kept inflation at bay. The biggest price falls came from electronic goods, fruit and vegetables, and the cost of domestic and international holiday travel. They counted a huge rise in tobacco excise, medical services, petrol and rent. Much softer inflation had all the economists agreeing.
There's no doubt the Reserve Bank will leave rates on hold at its meeting next week.
We do expect the RBA will sit on the sidelines next week.
It was also a welcome result for the government.
Now, it was encouraging that underlying inflation continues to moderate in line with both Reserve Bank and Treasury forecasts.
But the federal opposition says the numbers don't reflect reality.
For the everyday costs of living of everyday Australians, the bills that they have to pay have gone up dramatically. Electricity, water, council rates.
Put simply, inflation is running at just over half the speed the experts expected. Everyone agrees it buys the Reserve Bank more time on interest rates. The question is, how much more time? Some economists say rates could be on hold for the rest of the year. Others expect inflation pressures to re-emerge.
Price pressures are going to rise considerably over the next few quarters. The output gap is narrowing, the terms of trade is soaring, wage pressure is building, and that will definitely keep the RBA on its toes.
Come the September meeting, the Reserve Bank will have before it the national accounts, the GDP reading for the June quarter. That'll probably show growth running around trend or maybe just a little bit above. They'll also have figures on business investment plans. And given those numbers, and I think hopefully a bit more confidence regarding the global economy, then we expect that the Reserve Bank will raise interest rates in September. So, yes, there's a bit of breathing space for homeowners for the time being, but I wouldn't break out the champagne just yet.
The government may well be, though, at least temporarily, having dodged an election campaign rate hike.